McDonald's is this morning's best performer on the Dow, despite this quarterly revenue miss and U.S. comps falling by the most in nearly 5 years. David Palmer joins us this morning. Evercore ISI restaurant and packaged food analyst has a buy on McDonald's and a target at 340. David, good to see you again.
Hey, Carl. Good morning.
Seems like impressive bounce for a call that talks about fast food having a sluggish start to the year.
Yeah, it's rough in the U.S. They talked about double-digit declines in the low-income consumer out there in the U.S. In particular. It's rough, but they talked about it being tough in low-income consumer cohorts in many of their IOM. They talked about weakness in the UK and Australia. They're definitely battling a soft industry in many developed markets. There was some good news out there. They're lapping some of the Gaza U.S. brand issues that started around November of 23, so they're lapping that, and they saw acceleration there, and they've had some nice wins and some value relaunches, which are helping traffic sequentially. And then they hope that things will get better into the second quarter with some new food news, particularly in the U.S.
So what is your general bullish thesis on it?
It's really about the U.S. Same-store sales growth accelerating. The traffic it turned positive in the U.S. in the fourth quarter. January started off in a sluggish way across the industry. Weather's been a big factor. There's been some calendar issues with holidays falling in the middle of the week, and it's disrupting certain traffic. But going into this spring and summer, you're going to have the benefit of this past value. You know, they did that 4 for $5. They did a buy one, get one menu as well. That's helping their traffic. And now they're going to try to reinflate the check, which had gone negative in 4Q in particular. Remember, they had that E. coli issue, which also hurt family business. They feel like the brand's recovering off of that. And with chicken innovation coming, strips and wraps, they can reinflate that check, and the comps in the U.S. will drive the multiple higher, we think.
You know, I'm glad you went right where you did, because I wanted to ask you about, you mentioned these value options that they have. And sure, it drives traffic, but obviously you want to get the spend up. And I saw one analyst earlier, as I referenced with Carl and Leslie earlier, suggesting, quote, deep discounting is not a winning recipe for sales growth. You want to weigh in on that?
Well, this is a tricky thing. Revenue management in fast food is always about trying to do your value on one side and then show that value, get the traffic in, and trade them up on the other side with premium new news. Maybe that premium innovation, in the case particularly with snack wrap, which is a mid-priced item, that could have a positive traffic impact itself. But a lot of this is going to help reinflate the check. The problem is the way the bed's been made for fast food is there's been an over 40% increase in pricing during the COVID era, and that well outpaced wage growth of 25%. So what you're seeing is this hangover from the COVID era of inflation with that low-income consumer, and the company has to do value to get them back in the game before they can start reinflating the check, and that's going to start in 2Q.
At what point, I guess I want to ask about the competitive environment there, because it seems like inflation is pricing consumers out of a lot of places. And so at what point does McDonald's become more attractive from the inflation standpoint, because they're able to bring consumers in at a more attractive value than anywhere else? I mean, is that happening, or do you think that there needs to be a change in pricing there?
It's not. When it comes to franchise fast food, you can't control the prices of what the franchisees price. They take recommendations from a consultant in terms of their list price of their menu. What you can do is get together and do value menus, and that can portray value, particularly with these big advertising budgets. Remember, those are percent of sales advertising budgets. So you can imagine how huge that budget is right now. And if they portray that value with their value tiers, which it looks like the 4 for $5 is going to stick around perhaps past the summer, then you have the right to trade them back up again. So this is the game they're trying to play. They actually did it once already when they did the 4 for $5 really in July, got it going on traffic. By October, dropped the chicken Big Mac, and they were comping mid-single digits before E. coli hit. So they're just trying to run it back again and get this check to reinflate. But right now, their check is comping negative until they get the chicken news in.
Meanwhile, David, some of the earnings we've gotten the last few weeks, I'm thinking about some of these comps numbers at Brinker, for example, just eye-popping on a 2-year stack at least. I mean, to what degree is that a competitive threat versus food at home, for example?
Well, it's been genius what Kevin Hochman and team have done by juxtaposing what Chili's value is versus McDonald's and poking fun at the big fast food and all the pricing that they took, that they've gotten tremendous traction with them. They've probably been the most compelling barbell strategy of value and premium, because when you go into Chili's, you end up spending more than what the $10.99 would suggest. Beautiful move by them. So that's been just great marketing. Certainly fast casual and casual dining by appealing to the middle to upper income consumer. That's been a beautiful thing for them versus fast food, traditional fast food. They just have a lot of exposure to that low income consumer. Like we just talked about, that's been a real wrestling match in terms of getting those people out.
Yeah, it's a good explanation of what's going on with the Dow's #1 name this morning, David. Good to see you. Talk soon.